What's up, everyone? All right, well, today, Red Day recap. In fact, today is the biggest Red Day that I've ever had as of today. Perhaps in the future, I'll have a bigger Red Day, but as of right now, this is the biggest Red Day I've ever had. I'm not happy about it. I'm gonna kind of talk you through how I'm feeling, my kind of initial gut response, my reaction, how I'm going to sort of pivot, adjust, start to rebuild the account. It's the only thing you can do. Traders, we're resilient. And we're going to talk about that during this, I guess, Red Day recap, which is a kind of, but this is all, it's a Red Day recap, but it's also very specific to the emotional challenges of trading and, recovering from loss and everything else. So, yeah, it's a tough pill to swallow. It's not fun, but I have gone through so many of these cold streaks that I know out of every cold streak opens up the next hot streak. And so I just have to get through it. I have to not feed this downward spiral by being more and more aggressive and getting more and more emotional. And I should have stopped sooner, and I probably say that every single time that I have a big red day, but this is where I'm at right now. So my only focus is just trying to have a good day tomorrow and be focused on better quality trades and just to slow down a little bit. So I really hope you guys enjoy this. Please hit that thumbs up for the Red Day recap. I've got my biggest green day I've ever had on YouTube, and this is the biggest red day I've ever had. So, this is the real journey. Trading is not easy. Trading, even for someone who's been doing it for a long time, can be very difficult. It is a sort of emotional game more than sometimes anything else, but this gives you a little bit of insight into that journey. So I hope you guys enjoy it, and make sure you please hit that thumbs up and subscribe if you haven't already. All right, everyone. So today is a Red Day recap. This is actually the biggest Red Day of my career. So I felt like I needed a little help from a friend. Hey, buddy, are you up there?
What's up, man?
Can you see me?
I can see you.
No, you're not. You're not getting it. He doesn't see the video. There he is. There he is. Hey.
Is that it? There we
Yeah.
go.
So I'm kind of bummed out. Well, let me show you my P&L. I'll show you guys where I sit. So I'm down $57,572.58. You can see I'm red on 1, 2, 3, 4, 5, 6, 7 out of 8 stocks. So just across the board, red. And then in my main account, I'm also down 8,000, red on 2 out of the 3 stocks there. So basically today I have, 57 plus 8 is 65,000 in the red, but plus commissions, it's going to be the biggest red day I've ever had. The biggest green day I've ever had is a recap on YouTube. I recap the big green days. I recap the big red days. Obviously, fortunately, my biggest green day is much larger than my biggest red day. That wasn't the case up until this year. About a year ago, my biggest red day was 30 grand, and my biggest green day was like 41,000 or 42,000. And the green days have definitely gotten bigger in the last, the last year or so. But right now, as I sit right now, I'm sitting down on the month. This is actually the worst start I've ever had to a year. This is the worst year I've ever had so far. If the year ended today, this would be the worst year of my career. But fortunately, it's only January 12th. But it is a bad start. It's not a great start. And I feel defeated. I already did a recap where I was down 40,000. And then I came back and I took a couple more trades. And now I'm down 65,000. So I thought maybe as part of this recap, kind of talking it out, one of the things that's helpful for me is, for Jess, member of the 100K club, has made over $100,000 in profits trading. So I know that if there's someone that I'm going to vent to, it's always helpful to vent to someone who kind of knows what it's like, who knows what's going on. As much as I could call my mom and say, Mom, I had a bad day today. She's not gonna understand. Oh my gosh, you lost $65,000. Wow, you could have bought a lot of things with that. and I'll say, yeah, that you're right. And, it's not going to go super well. She's actually going to make me probably feel worse without even trying, without meaning to, but just because, she doesn't know what to say. And so Jess, here I am, biggest red day ever. I'm bummed out. Not, so one of the things that I would say is, let's stop. So we're going to use the acronym STOP. Stop. Take a breath. Observe how I'm feeling. I'm angry. My heart was racing a little bit earlier. I took a couple really big positions, 30, 40,000 shares. I was holding them up 10,000 and I wasn't taking the profit because I needed it to go up $1 a share to really make a difference. Then it came back down to break even and I was like, oh God, if I hit the bid here, I'm going to get slippage. Then I'm finally hitting the bid, getting slippage, and a $10,000 winner turns into a $10,000 loser. And then P is perspective. So the big picture here is, this was my month of December, where I finished up about 600 grand. My gross profit for December. Now, you might think that this is bragging right now, but this isn't bragging. This is part of perspective, and it's always important to put perspective around your losses. So 740,000 in gross profit. My net profit after fees and commissions was 650. So being down 57,000 in one day, or being down what is now 100,000 or so on the month, in fact, given the perspective and the context, is actually could be worse. It could certainly be worse. Something that I used to do, and how many of you guys can relate to this? What I used to do is every 3 to 4 weeks, I'd have a red day where I'd give back everything I'd made in the last 3 to 4 weeks. So, I would have been averaging maybe 200 a day or 500 a day for a month. I'd be up like 4,000 or 5,000. And then in one day, I'd lose 5 grand. I'd be back to square one. Has that happened to you?
Yeah, I've done that. I've done that plenty of times, especially when I was just getting started. I'd hit those like $200. I'm like, wow, I'm on a roll. $200,
Yes.
$200. I'd start racking them up and be like, I am the man. I got this.
Yeah, you're on fire.
And then, I get smoked. Just everything plus some. I'm like, how am I going to recover this $8,000 loss? Like, I thought I was doing good. What happened?
Yeah. And the realization in that moment that to recover that loss is going to take 5 weeks of impeccable trading at 200 a day, or whatever it is. Sometimes it's the next day. What's even the point? Why even get out of bed? I'm so emotionally destroyed. Why even bother? What's 200 a day when you've just lost 8,000? So tomorrow, I feel that. So right now, sort of the topic for this session is kind of just a stream of consciousness about the experience of having a really big loss, whatever that might be for you. Maybe for you it's not 60,000. Maybe that's just me. Maybe for you it's 200,000. Whatever the loss is, that's a big number where you're feeling upset and you feel like you've just made a mistake. This is a recap and a session that will help you. We're going to be talking about the experience of the loss. We're going to talk about the process of rebuilding. We're going to talk about the importance of resilience, because traders, we are those who certainly are successful and those who are on the verge of success, we're very motivated people. We want to make this happen. We have a goal, which is to be successful traders, and we refuse to give up. And that's why we keep coming back day after day after day, even in the face of having just had big losses. So I'll be back tomorrow. But the question is, how do I trade tomorrow to not just continue to fuel a downward spiral? Because sometimes if you have one big red day, you can have a second big red day because you're trying to make it all back or something like that. So we kind of started, I gave you that acronym of STOP, which is a good one for stress situations that maybe you've already heard of it. But so STOP, take a breath, observe how you're feeling, and then get perspective. And perspective is also not just the perspective here of like the context of, while it's true that this is the biggest red day of my career, what's also true? It's also true that last year was the biggest green year of my career. It's also true that I made $5 million, a little over $5 million in gross profit last year. It's also true that I have been on a little bit of a red streak. It's also true that I was a little too aggressive today. So a lot of these things can be true at the same time. It may be true that I feel like an idiot, but it's probably not true that I am an idiot. So it's kind of keeping these things in perspective and not wanting to beat yourself up too much. And then usually what I do after something like this is I kind of, one of the things that usually helps me feel better about the loss is to step back and ask myself, where did things go wrong? So I think I'm going to do that with Jess and kind of talk it out a little bit. And that'll give you guys a little perspective of where things went wrong today. So my very first trade today was actually my first trades were in my main account. And my very first trade was a small winner of $886 with 1,000 shares on ACTC. I bought it at the open, as you might recall. And I had kind of said, it's the leading gapper, but where's my gap scan? It's the leading gapper, but I'm not really sure. The float's a little higher. The price is a little higher. It's a special acquisition company. I don't know. But it was squeezing up pre-market. And so as soon as the bell rang, I jumped in with a long of, in my retirement account of 1,000 shares at $20.49. And I sold for about $1 a share of profit, most of it. So I made $800 in my first trade. My second trade, I jumped in CAPR, and this was at the open. It had dropped and then popped back up, and I got in to anticipate the first 1 minute candle to make a new high. I was long at 590. Now, if we look at this chart here, the first candle didn't even make a new high. So I was long and it immediately dropped and I lost $3,200 on it. I was anticipating the break over 6, so I was getting in a little early, but then there was that wall there at 590, a big seller. I gave it a second, it dipped down, and then it just dipped more. It was just immediate rejection. So I cut the loss, and with that, I was red on the day, realizing at that point that I was down 2,400. I was like, oh, I'm in my main account, not my retirement. I'm going to switch to my retirement account because the retirement account is tax-free. So I switched to my retirement account, and my first trade over there was getting back in ACTC. And on that one, on my first trade back in it, I had a small winner, a negligible winner of like $1,300. That was as it was squeezing back up, it looks like, right in here. It started squeezing back in. I got in, I got out. It was showing strength. I got back in, I got back out, and it halts going up. So, a couple nice trades, but not big money because I was afraid of holding because I was chasing it. You know what I mean? Like this is kind of the problem that recently it feels like if you don't jump and chase it, well, you miss the trade. Because the only trade here was just kind of a chase, a rip, and then it just faded. So I chased it, but then I added back, and when I added back, I took a good size loss on it. I think the loss was, I don't remember how much it was, but it was a good size loss. So with that, I was down maybe 9,000 on the day. I was going red. KUKE was an IPO. This one, I wasn't really watching that. I didn't even realize it was IPOing today, but it halted going up. I bought on the resumption, made $8,000 as it squeezed up into the second halt. Tried to buy the dip on resumption and gave it all back except for $1,500. I mean, you look at this dip and it really just came all the way back down. I was actually holding into a halt going back down. So 2 halts up and then 1 halt coming back down. It just couldn't hold up. So at that point I was down, let's see, so at that point I was still down around like, I don't know, 8,000 or something. And then I had DLPN. This one I jumped into to anticipate the squeeze right here on this pullback at 70. I think I bought like 10,000 shares right here. Long at 70 or something like that, maybe 80 or 90 even, and looking for the break of 5. Not a great setup, but the thing on this one was it halted up, pulled back, and then as it ripped through the highs, I was like, this looks like it might go through 5 and then into another halt. But it just petered out. So it took a $5,000 loss on that. And on that one, I took bigger size on it. It was 25,000 shares, lost 20 cents. So $5,000 loss. And then on this one, when it came back up right here, I got back in it with 30,000 shares right there at 5. It rips up to 530. I'm up 30 cents on 30,000 shares. That's $9,000. It looks like it was going to halt going up, and I was like, good, this looks great. And then in this candle here, it drops to 480, and I'm down $6,000. And then it goes sideways, and I stopped out on this candle right here for a $15,000 loss. Why are you laughing?
That I had this everything you're talking about was me yesterday. Not to cut in your recap, but I started the day out. I had some issues with my broker. I couldn't get out of the trade, so I was instantly red once I got back in action.
Right.
I'm like, all right, I can recover this. I've done it before. I can do it again.
Yep.
Everything that I bought instantly went the other way, and I'm like, all right, there's no way that this is actually happening. I think I'm a good trader. I think I'm doing the right stuff. And then I just started getting that emotional fuel of I'm jumping in this. Anything that's popping up, I was like, I'm jumping in this. It has to go up.
Right.
And everything just went the other way.
Yeah. Well, yeah, and that's kind of what happened. After the DLPN trade, I was down, I think, around 30 grand. ENG, it was a very similar type of thing. I took a trade on it at 7. It was actually, where was it? Man, where was this? Now I can't remember where it was, but I think it was either here. Yeah, no, I thought it was here. And then what was the low here? 68. I feel like I might have stopped out on that candle before it came back up. I don't feel like I was holding into that move back up. So I was in here again, 30,000 shares. Now I'm every trade basically taking with big size because I'm trying to recover. Another $9,000 loss. QLI, this one. So on this one, look at this, man. This goes from, it halts up on an IPO, halts up a second time. I missed the resumption because it was halted here for like an hour, and then a long time. It resumes, halts again, and then I pulled it up and I was like, I don't know, and it resumed and went right into another halt, and I was like, I missed it. Resumes right into another halt. Okay, I'll watch the next one, right into another halt. And then on this one here, you see that candle, it dipped. And so on that candle, I actually bought it at $15.90, which was a really good entry. It then halted up at 17.16 and gapped all the way to 22. So I was up $5 a share on 3,500 shares. That's $17,000. I bought 6,000 at 22 at high of day. And it looked like, because the thing is, on this candle it opened, it dipped down for a second. The high was 22, and then on this red candle, it curled up. It looked like it was going to break 22, and then I was thinking 23, 24, 25. And then it halted down at 17.99. Thank goodness, with 10,000 shares, my average was 1968. I hit the bid at 1837 or around there, and I lost 12 grand. If I had not gotten filled on resumption, it went down to 14. It hit a low of 12 bucks. With 10,000 shares, that could have been a $70,000 loss. It curled back up here to a high of 16, but it never recovered. So that was not great. That was not great at all. And the 10-second chart on this, you can see the dip where I got long. the setup is not that different from one that I would have traded last month on SPCS or ACY or some of these others, and ended up being in with 9,000 shares, then at a halt at 24, and potentially a 70, 80, $90,000 winner. But today, just it didn't have the steam. It just couldn't do it. It did a nice dip, and I should have just taken it all off the table. But the fact that it dipped down and then surged back up is bullish. And then I think what happened here was there was just a huge market order. Someone just, I don't know, sold a huge position, and it just boom, right into a haul down. So that was pretty bad. So then I was down 42,000 or something like that. I don't remember exactly where I was. I had another trade. I did try one more trade on it for the break over volume weighted average price, and I lost on that one again. That was in that account. And my last trade was on ACTC. So on ACTC, this one is kind of disappointing to see it's up this much. I bought, let's see, we had a consolidation here, and I had first a quick trade over 2130. Was it 2130? I can't remember. Maybe it was 2215. A quick trade here up to 23, and then I bought the pullback at 23, and I bought it with 38,000 shares. So this is a big position of a higher price stock, and I'm in it. It pops up to, let's see, what was this? Now I'm trying to remember. No. I think it was the spot that I sized up on it was for the breakthrough the high a day. I had a bunch of trades on it through the whole day, but the one that got me the worst was it was this one right here. It was right in here. I was long right here for the break through the high, for a high a day break. The high a day, you can see, was right here. I was looking for continuation through 2338. And, we're talking about a pretty big range on this. And I sized up and I added too high. It comes up, it couldn't break through 24, it then drops down. I stopped out down here. I think it was down here. And, I was like, all right, that's it. I'm throwing in the towel, and then, now it's up at 25. So I think that as I look at my trades today, I feel like I was chasing a lot, and I'm not looking at a lot of these and being like, wow, that was a really solid entry. And then, the ones that were solid entries, because I was in this kind of just aggressive mindset, I would be in with so many shares that the second it hesitated, I would just get out, and sometimes be cutting a 20 cent or 30 cent loss only to see it bounce right back up. And then what do I get back in? So why today did I kind of let myself start just trading these poor quality setups and just start getting so aggressive? I would say that the feeling for me today was a feeling of frustration and a little bit of maybe desperation. I have had obviously a bad start to the year. As we sit here, this is very early in the year. And for context, I was red in January of 2020, and I still finished the year up $5 million in gross profit. And I was red January of 2020, right here. So, but I am red, and I actually haven't had 2 green days in a row. I was green, then red, then green, then red, then red, then green. Yesterday I was like, yes, finally. $30,000, I cut the losses on the month in half. And today, I think the thing that was upsetting me was seeing stuff moving like ACTC and QLI and DLPN, and being super annoyed that I was missing it. And then when I was getting in it, that I was losing. I was just like, this is unbelievable. And then getting more and more frustrated, and trying to jump on anything that was moving to try to recoup losses, and just, all right, I just got to rip a couple quick trades, 20,000 shares, 20 cents here, 30 cents there. That'll get me back to break even on the day. Next thing you know, I'm taking a 50-cent loss of 20,000 shares, and I'm going from down 10 on the day to down 20. And I did recover from down 20 to down only 5, and then I went right back in the red. So I don't know.
Yeah, I think it's always important to know, when you're kind of in that that downward spiral, when you're like, all right, I'm grabbing at this, grabbing at this, grabbing at this. That number one is having the ability to realize that.
Yeah.
And I think that's what's kind of nice about like the chat room. It's like, all right, yeah, like, hey, like, why are you trading that stock, or you're below your max loss, why you're still going, we kind of keep each other mindful. But it's also good to hold yourself accountable, that when you're breaking those rules and you're kind of grabbing at different stocks, and like you said, you're upping your share size as you're going red, so you're getting that kind of divergence of, your red's getting bigger, you're taking bigger share size, and it's just kind of fueling that downward spiral.
Yeah.
It's important to, as traders, and like you said, we're very determined people.
Mm-hmm.
Day traders are extremely determined. You're not going to, go sit in your bed and cry yourself to sleep. You're going to, get up, come back, and attack it again.
Yep.
But it's being mindful enough to see that, apply it, and then change and adapt.
Right.
You can focus on how red you are, but if you start tomorrow, at zero, start at zero.
Yep.
Respect everything that you're a good trader. You've proven that you're a good trader. That starting from zero again is such a strong confidence boost.
Yeah.
I think that will, it always puts you in such a nice step forward, and it puts you into a whole new mindset of, forward momentum, instead of dwelling on that feeling of fear. Sometimes you have a feeling of fear when you take some red trades or take some big losses.
Yeah. I think, I think for me, I don't know. I hold myself to this kind of unrealistic standard of, I don't ever want to have red months. I don't ever want to have red weeks. I don't really ever want to have red days. And if I have a red day, through the month of December, I had a number of days where I was down $25,000, $30,000, $40,000. I kept trading and I finished the day green. And those are days that can be really dangerous, because they can teach you that revenge trading in a hot market can get back those losses. This is revenge trading in a cold market. In a cold market, there's not a lot of hope. It's just, there's not enough momentum in the market. And then trading with really large positions when there's not a lot of momentum in the market, you're going to have big slippage. And so what I did today in December probably would have produced very different results. QLI may have well halted a second time and gone to 28 and 30. Recent IPO breakouts in December were on fire. DLPN might have continued, might have just been more momentum on that one, and ASTC might have been cleaner, or maybe all eyes would have been on QLI as it ripped to $50, and that would have been the one I'd be focusing on. And that's something that's really confusing for me, because as I'm sitting here, I'm like, okay, well, I just had a big red day. What I'm doing right now, just based on my P&L, is not working. Now, I'm still the same trader that did X, Y, and Z last month, last year, everything else. Perhaps in a different market, everything that I did today would have been totally fine, and I would have been sitting super green. But right now it's not working. And if I do everything I did today again tomorrow, there's probably a good chance tomorrow's going to be a pretty bad day as well, because although momentum can shift on a dime, I am not really I don't see any indicator that that's really going to happen. So what do I do tomorrow? And this is where I really struggle, because I don't want to, I don't want to restrict myself. The options in front of me are, I take the day off. get a couple days to kind of get space because I'm, I'm just in a frustrated place. I need a couple days to cool off. Second option, I come in tomorrow, but I set a max share size really, really small of like 2,000 shares or 5,000 shares or something like that. And I just trade conservatively. I just take a couple quick trades. I have a max loss set on the account, and I don't trade past it. I just accept that if I do have another red day, even though I will be very frustrated to have another red day, even with small size, that it's better to just limit the bleeding. The boat's taking on water. First, I need to stop the bleeding because the next couple weeks of bailing out, just less bleeding means less of those losses I've got to try to bail myself out of. And then the third option is to come back tomorrow and leave everything exactly as it is. Trade with 50,000 share size, hope that we have a big move and that I catch it and grab 10 points on it and make 500 grand. And that's, those are sort of the ranges. And of course there's a few spots in between, but those are sort of the ranges of my options for tomorrow. And I think we can all agree that coming back in tomorrow, emotionally charged from the biggest loss I've ever had, and from being red on the month and red on the year, I'm not going to be in a place where I could responsibly trade with 40 and 50,000 or 100,000 shares and trust myself to make good decisions. I also don't think the market's going to be strong enough tomorrow, just based on the fact that today and this month so far has been slow. And then I don't really want to take the day off completely because I'll just be sitting thinking about today, and I usually find that the best way for me to kind of start to recover is to get back on the horse, take a few trades, and kind of get just a couple of green trades space between me and this big loss. And so that kind of brings me to the option in the middle, which is to come back tomorrow with restrictions on my account, which is essentially trader rehab, where I restrict my trading, and I could put a cap on my size tomorrow of 5,000 or whatever it is. Let's just say 10,000 shares for right now. And the problem for me is that I sometimes will talk myself out of that because I'm like, well, what's the point? What's even the point of trading with small size? I'm down $75,000 or whatever, $65,000 today. What's even the point of trading with small size? So I can make $650? I'd have to do that 100 days in a row. Like, what's the point? And that's what will encourage me to continue to trade with bigger size. And unfortunately, that can allow the losses to sort of start to snowball even more. If I'm starting tomorrow with 25,000 shares, you know what I mean? So the right decision is to stop the bleeding and to trade with small size. And the regret of missing out that I'll have, the FOMO and the ROMO, regret, unfortunately, that is the punishment for my failure today to manage risk in a better way. So it's what I've got to do. And,
yeah, I think a lot of that, what you're saying is so accurate. And a lot of that too is, as day traders, we're so connected to the P&L.
Yeah.
Because that's what, in the end, obviously that's what you're looking for. You're looking to make money. But
yep.
I think in what I've done and what I actually did today, I'm in the same boat you are. I'm not down as much, but in relatively speaking, you and I trade very much alike. I just don't take the share size that you take.
Yeah.
And being disconnected from the P&L, when I came in this morning, I was like, I have to just respect the chart. Mm-hmm. It doesn't matter the small share size, as long as I'm respecting the chart. I'm not looking at my P&L. I'm not trying to recover everything all in one trade. And in the end, it just turned into very clean, very smooth trading, taking trades off of a nice chart,
yeah.
Letting the trade ride to a certain area, taking, selling half, selling quarter,
yep.
Whatever it may be. And that in turn kind of gave me a nice little confidence boost. I ended on a decent little green day.
Yep.
Now it's just not looking back at that huge, like whatever your losses may be. It's just, like I said before, starting from zero with this newfound, accuracy. Just keep repeating it day after day. And then obviously when the time is right, and then we see those big, 4, 5, 6, 800, 1,000% moves, that's when you can come out and really start pushing it again.
Yeah.
Maybe that would be the day that, comes that instantly wipes out that big loss.
Yeah, no, for sure. I could really use a $100,000 green day right now. I can pretty much guarantee you that there is a $100,000 green day in my future, not too far away. Is it a month away? Is it 2 weeks away? Is it 3 months away? I'm not sure, but there's one somewhere out there. And, I can't get myself so bent out of shape trying to force it when the market's just not there, when it's not hot. And I think that, if I said, well, I'm going to do trader rehab until I've made back all my losses, if I did that, I'd be just trading, looking in the rearview mirror. I'd just be constantly focusing on this number that I have to make back. I really don't want to do that. And it's not really a good way to focus. I think that what I should do, and this is going to be hard because it requires some discretion, but what I should do is trade with smaller size for the rest of this week, see how these next few days finish out. If I have 3 small green days and maybe we start to see something open up, maybe next week will be better. But if it continues to not be great, I have 1 green day, 1 red day, another small green day, at least the days will be smaller because I'll be trading with smaller share size. And realistically, I can guarantee you 2 weeks from now, I'm going to be totally over the losses from today. I just kind of have to get through the next few trading days in the next couple weeks. And this is kind of part of the process of, in a way, grieving a big loss, of just, it's so raw when it happens right away, and the emotion is so strong that you'll sometimes think I'll do anything to try to, to not feel this way anymore. And the best way to not feel this way anymore would be for me to hit a $100,000 winner, right about now. But that's then trading to try to make yourself feel better, to get that big win. That's the emotional stuff. That's not trading the market that's right in front of you. So it's not the right way to be trading. It's just the fact that when those emotions are really strong, that's when your emotions can start to hijack your trading. And I think that there was a point today, and there's probably a point many days in the last month where I've been red, I've been a little frustrated, not happy about it. I've been able to dig myself out of the hole and finish green. And were some of those days revenge trading that worked out? Maybe. Were some of those days just me digging myself out of the hole and finishing green? Yes. I mean, I don't know what you'd call it. I wouldn't like to say that every single day I've ever been down more than 10,000 then finished green was a result of revenge trading necessarily, because I think some days the market genuinely provided good opportunities. I was in a good enough mindset to trade them well, and trading them well meant that I walked away with profit on those names and was green. But today, as the losses started to kind of snowball, I was like, okay, I'm going to take a little break. I took a little break, then I came back and I was like, okay, I'm coming back. All right, I'm down 20,000 or 30,000 or whatever it was. All right, let's see what's moving. If I can cut the losses in half today, that would be good. And then I lose another 10,000. Okay, I'm going to take a break for a few minutes. Take a break, come back. All right, if I can cut the losses in half today, that would be good. And then lose a little bit more. And so it's like, all right, you know what? Everything, I'm just, the breakout momentum strategy is not working really well on some of the stocks like ACTC. And then on the ones that it might work better on, we're just not seeing enough continuation. Today's just not the day, man. You just got to live for tomorrow, just move on and not keep trying to force it. So
yeah, it's hard to do that too, because like you say, you're kind of you're in the moment. You're like, oh, I next one will do it. The next one will do it, and you're just you're spiraling down.
Yeah.
versus taking, you could just take one really solid trade and just be like, you know what, I'm green, I'm done.
Tomorrow.
Lock it up, come back the next day. And that'll, like you said, once you get that space between you, it's kind of like it stings quite a bit, as soon as it happens. But yeah, if you take that time, you reflect, you look at your year, you look at where you are, and just kind of take in consideration everything that, how far you've come and what you've kind of gone through. You've gone through losses before. I've gone through losses before, and we've obviously recovered all of them. And if you look at that all the time, it helps you get over that kind of sharp sting of taking a loss.
Yeah, and you're definitely right about that. Having faith in the overall ebb and flow, that out of this cold streak will come another hot streak, and 6 months from now, everything going on today is going to be totally irrelevant. So given that, probably not worth getting too bent out of shape over it. But it is, in the moment, it is definitely very difficult to accept that kind of big haircut and to accept that this is just not a super strong market. And I wish that I was better at accepting it sooner. But I think what happens for me is that when I'm in a hot streak and I have the first good sized loss, oftentimes I'll be like, okay, well, just lost 40 grand off the top. All right, well, that's not great, but I can bounce back, I can recover. I do a dip trade. Next thing you know, I've recovered it and I'm kind of back up at the top. And then that might be like a false breakout. I'm like back up at the top, but just kind of barely. And then a couple more trades, and now I'm starting to stair step down. I try to do another dip, another kind of risky, aggressive setup, and then now I'm 3 red days in, I'm down 50,000, and it's like, all right, at this point, I probably should tighten it up, but now I feel like I don't really want to, because if I go with small size, I'm just locking myself in that I'm going to be dealing with digging myself out for a longer period of time, and I'm kind of guaranteeing that I won't have one trade quick recovery back into the green. And that's a hard, I guess, reality for me to settle into. And yeah, I don't know. This is, I think, again, I said this earlier, but it's kind of an occupational hazard with trading, that we have this stress around big losses, just because there's no such thing as a trader that makes the same amount of money every single day, every day of the year. There's going to be days that are better, days that are worse. Those days bring out different emotions in you. If you're really pushing it and trading at the edge of your comfort zone, which I do, and I think that you often do as well, even though our comfort zones are different, the P&Ls are going to be numbers that, bring out some emotion, some bigger green days, some bigger red days. And so, yeah, the best thing you could do is scale back, reduce the size for a little while. That's the trader rehab, just to kind of cool off. And yeah, maybe come in, just take one quick trade. One of the things that's going to be frustrating is so tomorrow I'll probably be hesitating a little bit, because I'll be like, oh, I don't know, I want to make sure it looks good. And then, something like this that rips from 19 to 2150 and halts going up, I'm going to be like, man, I'm obviously missing that one. And then it finally does a pullback, and then, my luck, the pullback is a false breakout and fails. And it's like, come on, like I can't even, I'm trying to focus on slower, trying to slow it down a little bit and not jump so fast, and I'm still not catching it. And that may be just the nature of trading through a choppy market, unfortunately. And that's a good reason to trade with small size until we start to see things open up. Now, the question there about why don't I cut my losers faster, the biggest reason, and one of the problems for me today was adding. So like on ACTC, I was already on it. So this one, on the trade that where was it? It was somewhere up in here, wherever, I think it was here. I was long like up here, and then I was adding up here for the move up to, up here. So my cost basis on this ended up being really high because I was adding. the better entry would have been down here at 23, and I was in probably 70 cents above a good entry. And then as it's consolidating sideways, now because I've increased my position. And if I was trading, if I was paper trading, trading a simulator, I could just hit the bid like that. But with real money, there's liquidity issues with some of these stocks with large positions that I can't just unwind a 30,000 or 50,000 share position with one click. If I do a market order of 50,000 shares, I'm going to get some good slippage on that. And so I always will scale in and then I scale out. But yeah, it definitely makes me hesitant sometimes to just cut my losses really fast. So, it's kind of like, trying to navigate a 200-foot yacht through the marina. You just don't have you can't be nimble. And you just, I don't know where to go with that analogy, but it to the extent that sometimes with small size, you can be really nimble and you can get in, get out, lock, profit, in with 4,000, out with 4,000, boom, that's $800. Do that 4 more times as it's ripping up and you're in and out, instant order execution. You're doing market orders or limit orders and they're just filling instantly. You just try to do the same thing with 40,000 shares, it's not going to work. And so that's where I am kind of struggling, because in a hot market, stepping up to the plate with that big size, when I get $2 a share with 40,000 shares, that's when we're talking about $40, $80, $120,000 trades. Biggest winner of last year was, I think, $120,000 in one trade. Biggest loser is 58,000. Fortunately, I didn't set either of those records. Well, the losing record today, but you're not going to hit that with small size. That would be almost impossible. So, yeah, I think it's the hot market sizing that's causing a little bit of a problem, because I'm adding, and then I've got a full size position, and instead of getting that extension through the level, it just fades back down. And now I'm back to break even, but with 30, 40, 50,000 shares, I can't just hit the bid. And so then I wait to see, well, I don't want to hit the bid and then see it pop right back up. And then it doesn't. And then I exit where it's obvious, and where it's obvious, you're going to see a flush. And then I'm getting slippage on the exit. So that's another advantage with small size. And that also speaks to, just to put this on full screen for a second, the potential diminishing profits that come with increased share size, where you could actually have a place where you start making less money as you increase your share size because of liquidity issues in the market. And this may be a time that I'm having that issue, where the current share size that I'm trading is not working in a cold market, and perhaps in the last week, had I been trading with only 5,000 shares every day, I'd actually be in, maybe I'd even be green. I don't know. I don't know, but yeah. So that's a long answer to your question there about why don't I just cut my losses faster? But I would with smaller size, and I really can't with bigger size. So with a bigger size position, you're a bit more committed to the trade, and so when it doesn't work, the impact is stronger. So I think that the takeaway from today, and kind of the resilience and the feeling of I'm going to recover this, I will make this back, and the confidence that I will, knowing that my strategy is sound, and that the problem here, not really a strategy problem, more of a execution of the strategy, more of a letting emotions get in the way a little too much. Anyone can criticize or whatever they want about me as a trader or me in the way I manage my emotions, but it's just sort of the way I trade right now. I'm aware of it. I want to get better at it, but I do find myself sometimes on that emotional roller coaster. So anyways, I'm right now needing to step off of it for a little while and cool off, let the emotions simmer back down a bit. And that means my game plan coming into tomorrow, I had Lightspeed put the max loss in my account. I had them set it at $10,000, so you can see that that's actually already set here. So actually, I could trade in this account right now if I want to, but I'm not going to. So I'm have a $10,000 max loss on the account. That is a little generous. I could tighten it up to 2,500, but what I did quite a bit of last year was I start the day on my retirement account, I hit the max loss, and then I trade in my main account. Well, that ended up being a lot of profit in my main account that now I have to pay income tax on. So I'm just going to set the max loss out a little bit further. Maybe I won't trade in the main account at all. I could just disable it for a little while, but for whatever, I'm not going to think about that right now. For right now, I'll just focus on my retirement account. I want to try to, trade there. And I asked them to set a max size of 20,000 shares on my account. But tomorrow when I come in, I think that I'm going to trade with 6,000 share max size. That'd be 2 orders of 3,000. So what I can do here, even though it might mean that I miss a little bit tomorrow, it's fine. So I think what I'm going to do is go into my warnings. I'm going to do my own restriction of 6,000 shares. Now this one I could choose to override, and if I end up having I don't know, that's the risk, but that's where I'm going to set it for right now. And I guess then the question is, when we look at my P&L so far on the month, every day this month has been more than 20,000 up or down, except for 19,989. But let's just round up. So every day has been up or down more than 20,000. So today's red, based on this pattern, I've got a good chance of being green tomorrow, and that's the part of me that's like, well, just keep doing what you're doing. You'll get 20,000 bucks, probably 25,000, maybe. But I can't risk a second red day in a row, not right now. And I need to if I had a second red day in a row, the emotional damage that would cause is actually more significant than the benefit that the green day would give me. So this is a time where I actually have to be really protective and guarded of maintaining my emotional balance and trying to nurture and support my emotional recovery here as I kind of restabilize and get my confidence and my legs back underneath me. And so for that reason, tomorrow I'm going to probably have to come in and do kind of hit and run trading of boom, boom, in, out, green, I'm done, I'm walking, I'll be back tomorrow. And just try to put some green days under my belt. And if I do that for a few days in a row and the market just does what it does, maybe it starts to pick back up, then maybe by sometime next week we'll be in a better position and I'll feel comfortable stepping up to the plate. But I'm just not in a place now where I could feel comfortable being aggressive tomorrow. So I don't think there's any way I'll hit, I don't know that I should even set a daily goal right now. I'm not going to hit a $10,000 daily goal with 6,000 shares. It's almost, it's not possible, but we would need something to go up several dollars a share. So I don't know. I guess I don't know. What do you think, Jess?
That's what I was just going to jump in and say that's what I was kind of, I avoided. I didn't set a daily goal because number one, I was trading the chart. I wasn't looking at my P&L. So I was letting the daily goal kind of come to me based off of proper trading, proper share size, not getting emotional. And then it just letting it be what it wanted to be. If I went red instantly, yes, I'd peek at it just to make sure, I wasn't going red, obviously. But if I went red, that means I was done. Cut it off, walk away. Because more times than not, you look back and you're like, oh, I'm feeling that red day or that red week, that red month, just like you were talking about. You're just going down, down, down. Now you're down so much. You're like, what's the point of walking away? I'll just keep going and see if I can recover all of this.
Yeah.
So that's what helped me, just hiding everything. I don't need to know what I'm making as long as I'm trading the strategy properly. Taking it off the chart, trading stocks with momentum, with news. The wind is at your back.
Mm-hmm. Yeah, you're right on that. Yeah, so maybe just kind of trying not to look at where I sit on the day, and I'm curious about. I've sometimes wondered about setting a max loss on my account of like $100. Like if I go red, just stop trading. Just because, usually my best days, I go green right away. I mean, let's be honest, usually that's what's going to happen. I'm going to go green right away. But sometimes you'll have a day where you do have a loss, and that's totally fine. I lose 30% of the time statistically, and sometimes those one or two losses will be the first two, and then I still finish the day in good shape. It's just that when you're already a little emotionally fueled, when you go red right away, sometimes it's like you get up the next morning and someone's throwing salt in the open wound immediately the second you sit down at your computer. And so it's just like, it's just immediately putting you back in that mindset of, I'm still losing, I'm still not dialed in. And so for that reason, I probably should have a tighter max loss on my account tomorrow. Maybe I'll say tomorrow I'll put it at $2,500. So if I go down more than 2,500, I'll just say, you know what, whatever. I'm just going to call it a day. So it's red days in a row. It's fine. Obviously, in a hotter market, making back $2,500 is like easy for me. So I just have to wait for the hotter market to come. And if I had 5 $2,500 red days in a row, at the end of the day, that would be a lot easier to recover from than a $38,000 red day, a $65,000 red day, because I went into the trenches trying to battle it out all the way to the bitter end. So I don't know. It's just the FOMO that comes when you do get stopped out, and then later in the day you see that stock you lost on ended up ripping up like 300% after you left, and then you're like, then you feel like I should have kept going. But again, right now, to guard that emotional stability, to try to just focus on getting my confidence back, tight max loss, $2,500, 6,000 share max size for tomorrow, and maybe see whether or not I can just trade for a shorter period of time, because one of the other challenges is my emotional composure is probably my ability to maintain discipline when I'm really in the zone might be for 5-6 hours, maybe. But when I'm already so easily triggered because I'm in this state, it only takes one loss for me to go off the handle, So I hardly have the ability to trade till 11 a.m. right now. Not that there might not be opportunities in this and that, but just because I'm vulnerable right now. So I have to be careful. And so tomorrow is probably going to be just a hit and run, try to hopefully we have a decent gap scanner and there's an obvious gapper. We had one yesterday and we really didn't have a good one today. And that's also an important thing of just being more present with the current market you're in. And maybe tomorrow is a good day if I sit down and I'm like, I don't like the scanners. Maybe at that point I say, you know what, guys, there's nothing here for me. I have no trades pre-market. I don't like anything for the gap and go. It's not worth it. I'll just come back tomorrow. I'll just take the rest of the day off and I'll come back tomorrow. Because if I'm already looking at stuff pre-market and there's nothing in the gap and go scanner, then the day's already not looking great. And that's kind of what today actually was. So, so that's kind of the process there of, thinking about the loss and kind of going through it, talking about it, and coming to some type of game plan of, okay, this is what I'm going to do to kind of dig myself back out. And then it's leaving all that right here at my desk so I can go hang out with my kids and enjoy the rest of the day and say a couple of things that I'm grateful for and not try to get too, deep into feeling sorry for myself, because in fact, feeling sorry for yourself accomplishes nothing. It accomplishes absolutely nothing. And so you might as well just not feel sorry for yourself. Feel grateful for the things that you're grateful for, the opportunity to be a trader, the opportunity to sit here and teach you guys from everything about what works to everything about what doesn't work, the ups and downs, and, for my health and everything else. So that's what I'm going to do. I appreciate you guys being here. And again, this is me putting it on the table, the real journey, the real ups and downs of being a trader. Yes, the ups are, glamorous, and I'm sure a lot of people would love to make 200,000 in one day. But remember, if if you can't handle the losers, you're not going to be allowed to have the winners. And it's even I still struggle with how to handle the loss and compartmentalize it to be able to put it away and not be thinking for the rest of the day that $65,000 is the price of a brand new, I don't know, Volvo station wagon or something. But I mean, think about how many Skittles I could have bought with 65. I could probably fill up this entire room with Skittles for $65,000. It's a lot of Skittles. So, got to find a way to just put that aside. We're talking about big numbers. Think about how many Skittles Bill Ackman could have bought when he lost like $4 billion on Herbalife. A lot of Skittles. But you find a way to put it behind you, and obviously people who are far, far more successful than me have figured it out, and I can figure it out too. So thank you guys for being here. Thank you, Jess, for being my sounding board. And I will see you guys back in the chat room tomorrow, and we'll see what the market wants to give us. All right, see you guys later. Bye, everyone.
Hey, man. Thanks for having me.
You're welcome. See ya.
Take care.
Oh, hey, I didn't see you there. Help us hit 750,000 subscribers by hitting that subscribe button, and stay tuned and check out some of my other awesome uploads right here on YouTube.